Morning everybody, it's Chris here from Serene Education with the 4 majors notes update for the, what's the date today? The 7th of March 2013. Hi guys, if I remember there, didn't know what the date was. Sheesh, gotta have my caffeine. Anyway, let's carry on. So yep, 4 majors per usual with us. And just over my long-term strategy templates, it's far better, especially for all you newbies out there, just to get an understanding of how the templates work on a larger time frame. And once you get used to this, then you can start moving into your intraday time frames and using the same principles. So yeah, 4 majors, euro against US dollar to start with. Let me just first start off by saying there is a hell of a lot of news out today, guys. Thursday today and tomorrow being Friday, non-farm payroll, there is a hell of a lot of news. Let me just say, we had overnight figures for the interest rates for Japan, which were unchanged. That's bound to happen because we've had the same level for the last, since 2009, if I'm not mistaken. Trade balance figures for Australia were not good. They were down by almost a further 50 billion, or half a billion, apologies. We got the Swiss franc foreign currency reserves this morning at 9 a.m. and then we've got the Chairman Jordan speaking this morning at 9 a.m. GMT. Then we have the Spanish the Spanish 10-year bond auction, as well as the French 10-year bond auction. So very important for the Spanish bonds in particular, French as well. German factory orders, a very, very important one. And then we go into sterling. We got the interest rates announcement this afternoon for sterling at 12 noon GMT. Then we have the minimum bid rate, the interest rates announcement for the European zone at 12:45, quarter to 1 GMT. CAD this afternoon. Before we go into the into US news, we've got trade balance figures for there. Building permits, also a very important one. They're expecting a positive figure for building permits, month-on-month figure, which is great because the previous figure was a negative 11.2. They're expecting a positive figure of 5.4. Comes on higher than that. Should be good for the loonie. Okay, ECB conference this afternoon at 1:30 GMT as well. Then we go into the big ones. We've got the US data. Unemployment claims, very, very important. Trades balance figures, very, very important. We go into the revised non-farm productivity quarter-on-quarter figures, very important. Then we have the most important one is the bank stress test results for the US session or the US market. Very, very important. Okay, so there's a hell of a lot of news this afternoon, which will lead up to a lot of speculation. Okay, we don't trade speculation. So if you are a newbie and you're not in any trades, rather stand aside and wait and look and learn. Most importantly, learn, because you will see how fundamentals and how much the fundamentals out there are speculative drives the market, especially when you go into a non-farm payroll week. So just stand aside and learn from it. It's so important. Other than that, let me crack on with the euro against US dollar to start with. So where we are on the weekly, still trading into the major support and resistance level. You can quite clearly see 1300 is below us, this black line over here, psychological round number. Price hesitated through 2012 in particular at this level, the first start of the 4 months we've had, and you can quite clearly see the reason why we're interested in these areas is primarily what is price doing at these areas. Is it consolidated? Is it hesitating? And yes, it has. It has done so on a number of occasions. So you've got to be aware of it, because people, if they're selling right up here on a weekly chart at this bearish engulfing candle, would ultimately look at these areas here as potential targets to the downside. So we've got to be aware of them. And you can see, I've plotted that on our daily. There you go, the black line, and you can quite clearly see price as we headed into this area here becoming very hesitant. Okay, not falling as sharply as it did before the start of this breakout, but nonetheless getting below it. Yesterday's candle in particular pushing low, trading at a high point here at roughly the 1307 if I'm not mistaken. Prior resistance level over the past couple of days, price support recently, and you can see the bearish engulfing candle engulfing this hesitation now. So as long as it maintains below 1300, guys, now we are seeing price which tested the 1300 near term 3 days in a row as support. Now we're seeing the bearish engulfing candle yesterday breaking that. Are we going to see the 1300 now being a resistance? Okay, prior support becoming a new resistance, price support becoming a new resistance, price support, new resistance, and price falls. Okay, so very, very important. Your intraday high should be 1300. Price cannot trade above 1300, otherwise you're seeing price moving against market sentiment, and we don't trade that. We're trading with market sentiment. In this case, we're trading negative because everything is telling us we should be looking for negativity. So intraday, 1300 is your resistance level, and look for downside momentum. So work into your 4-hour time frame. There we go. There's my 1300. Look at price support recently, so the start of March, and now you can see the breakout yesterday moving lower. However, over the last 12 hours, price has pulled back, and as long as it maintains below 1300, then we should be looking for potentially a nice bearish engulfing candle. Will we get that now leading up into the weekend with all the news that's out today, with interest rates, etc., but most importantly, the data that's coming out of the US session? Okay, not from payroll in particular, because you'll find that if the US market goes belly up, then all its counterparts trading against the US dollar should rally or turn south. So if the US market continues to show some really positive figures, which it has been doing yesterday in particular, we've seen the S&P and the Dow trading at all-time highs, then there's more likely for price to keep falling for the euro. So very, very important. So let's be aware of that. Hourly chart, there we go. You can quite clearly see nice break, long consolidation through the period here. If you've just been been very, very patient, myself in particular, I've been in this trade since the 25th, which is way down here, and you can see price actually moved higher. So I was in a negative for a while, then I was in a positive, and I'm still in the positive break even at the moment now, which is good because it's still moving to the downside. I'm still looking for shorting opportunities, and as long as my support, my stop levels are in the right place, then it's just down to patience. Okay, so you can quite clearly see that the momentum is still very much red, very little blue on the top, and you can see the institution moving average still above price, so it's still telling price should be going lower. And you can see the last hours, you can see quite very indecisive, spinning tops after 4 hours here after the Tokyo Open this morning, and bearish engulfing candle as we speak going into the European session open. So long may it hold. So look for a nice bearish engulfing candle here. Target the low that we saw recently here at 1296 and change. Get below that, and then we should be looking for our daily target to see that we should be seeing price heading off towards that all-important 1287.89, going towards the 12900, because that is where the institution will be, as well as my next support and resistance level. On to sterling. Here's another one I've been in since the 25th. All the right up here when we saw this bearish engulfing breakout. What's price been doing since the early part of January? Falling, and in doing so, falling to particular support and resistance levels. Near term was when you had 1700 on my weekly, and then price broke again. I want to know how far I was likely to go to. Ideally, the 15300 would have been my first target, because that's a major long-term support and resistance level. I'm looking at price here over since 2010, support through 2011, support going to 2012, support. So that would psychologically be a nice area to take profit. Bang, did so, then re-entered. Okay, so where was it likely to go to? I did a fib projection from the all-time high on the shooting star at resistance to this little consolidation here at the early start of February to this bearish engulfing candle here. So if I just show you how I did that, fib projection tool, all-time high here on the weekly, down to this little support here, this support candle, moving it back to this bearish engulfing candle. You can quite clearly see that 100% would be my initial target. There we reached it, and you can see price pulled back healthily over the past week. However, if I go to my daily, you can see that consolidation now has taken place, and price is now starting to fall. Bearish engulfing yesterday, an exhaustion candle the day before that at a resistance level, which happened to be the weekly 78.6 fib retracement on the projection at 15200. Fell to actually go higher than 15200, so telling us that sentiment is still looking negative, and sure enough, price has now fallen shorter. So bearish, breaking below the 1505, which is the 100% extension on my fib projection level, the one I showed you just now on the weekly, and now we should be targeting all-time lows. So my next target shall be roughly around the 148500 mark. Why that area? Because on my weekly, you can quite clearly see we've had a consolidation in that area. Okay, so 148500, nice place to go to. Get below that, then we should be looking around about 14500 and 14200, those particular two. So as it stands at the moment now, all my negativity on my daily, all my moving averages above price, everything's looking negative. Are we going to see sterling falling even low with all the news that's coming out relating to the US market over the next couple of days? So it's very, very important. So intraday, my resistance level should be my price support, and we should be looking at roughly around a number here at 1505. So make a note of that. 1505 intraday should be a support and resistance level. You can quite clearly see I've noted that, and you can see we've had one or two areas of blue, but you'll be trading against market sentiment, and including a major support and resistance level. So no trade. Okay, now we're trading lower. Okay, so 1505 needs to become the new resistance level. Price support becomes new resistance. That's how it works. Trends. So make sure your intraday, your resistance level is at 1505. Trades above 1505 going into today. Then we're going back into this consolidative range. There's no trade because you're losing time and it's going sideways. You're not making any money, so it's not worth it. Price is only going to be positive again if and when price is trading above 15,300 and the institution. So it's going to do a lot of work to get above those areas again. So as long as it maintains below 15,300, our long-term psychological support and resistance, we should be looking for bearish setups. US dollar Swiss franc. Let's have a look at this particular pair. Been trading in a very nasty consolidation, and look at all the momentum we've seen over the past couple of weeks. Bullish engulfing here, moving higher. Ideally, I'd like to have seen 945 being broken, and you can see that the end of this week going into Friday, you can see a lot of sentiment moving in favor of the US dollar against the Swiss franc. Let's move on to that daily time frame. You can see I said price needed to remain above 940, and sure did we get it yesterday. A lot of buying sentiment coming through. Nice support now, guys. Breaking above the institution, very important. Heading into a psychological run number now at the 950. Get above that, and it's plain sailing. We should be looking upside favorites. And if you want to, you can take a fib projection from the all-time high that we saw in July of last year to the current low on our daily. You can see where that 50% is at 950. Get above that. 960 to be your first targets. Then the 78.6 fib retracement area, roughly around the 975 mark before we said we see price moving up towards that 1,000. So things are looking very, very positive for this particular pair. Hasn't been above the institution on a daily since November last. So looking good, looking good. So long may it hold. Got to get above that 950 to see further extensions to the upside. So take that in mind. Look to see what price is doing in and around that area right now. So on our 4 hour, you can quite clearly plot it on. So 950, there we go. Make a nice dark line so you understand where we are in the picture. Get above it. You can see on our 4 hour time frame, you can see the last 12 hours, 16 hours of trading. Price has just gone sideways. So we want to see momentum continue to the upside. Get above that, and then we'll see plain sailing going forward for the foreseeable future. So long may it hold. 950, make a note of it. Need to be above it. Otherwise, look for potential bearish engulfing candle to see price pulling back near term. But it all remains, as long as the US dollar is showing strength and sentiments pulling through on the US session, then you're going to see price moving upside. So keep that in mind. Last pair of the day is the US dollar Japanese yen. Let's have a look at this particular pair. Looking at a monthly chart, reason why, so I can see the long-term support and resistance levels. I want you guys to see this. It's imperative to see where price is trading on these longer terms, just to see what you can, where its market sentiment will lie intraday, going into our smaller time frames. Because if we are trading to a major support and resistance level, then there's likely to be less movement or sentiment or volume trading at a major support and resistance level. Clearly see from the 2007 highs, you can see price of the US dollar has dropped against the yen over the years. However, nice base here through 2011 going to 2012. A lot of buying sentiment coming through, and prices started to turn bullish indeed. Look at the sentiment over here, guys. Very, very bullish compared to this negativity here. Buying straight into 23.6, and as I mentioned, moving into a major support and resistance level. This is a monthly chart, so you can see quite clearly as we headed into that 23.6 here around about the 87 mark. You can see price anchors hold, and you can see price actually consolidated for a while before we saw price breaking out. Near term here, going into 94, also a long-term support and resistance level. Price is consolidated. Very indecisive candle over that month. A lot of indecisiveness. This month, taking it on and moving higher. So price still wanting to go higher. So if you look at our daily, I've got to make a note of that 9,400. Look at price did. Okay, we spent the last month going sideways, guys. In February in particular, a lot of indecision, a lot of attempts at 94, but no clear break, and then we had a bearish engulfing candle which really took away all the sentiment. However, not breaking lower than that 22.6, which is a fib retracement from the all-time low in September on our daily to the current high at 94. It was imperative that price actually closed lower than 23.6 to show us that this was really a negative sentiment candle. It failed to do so, and what happened? Price started to build on it again. Very indecisive spinning top there. We want to see the buying sentiment. Sure enough, candles were seeing more positive sentiment than negative. very wicky, but still wanting to go high, and sure enough, we've seen price moving into those highs again. So what do we want to see? Price ideally trading well above this area of consolidation. We don't want to get flaked into any trades on this particular one. So if we could see a nice bullish engulfing candle by the end of close of this week, seeing price moving above 9,500 in particular, that means we'll be trading into cleaner air for the foreseeable future. So be patient, look at our 4 hour, get above that 9,400, stick above 95 in particular. So the further away we get from this major support and resistance level on our weekly and monthly, then the better it is long term. Okay, you can see a lot of hesitation, a lot of breakouts here. We don't want to be faked into anything. Rather give that back to the market. It's a lot to give away, I know. You buyers are probably screaming, saying, what the hell are you trying to... But I can tell you, the more we get away, the further away we get from 9,400 on the upside, the more likely his price is going to continue to rally for the foreseeable future, i.e. the next couple of weeks, months, etc. So very, very important. Okay, so wait for that break of the 9,400. Look for the consolidation. You can quite clearly see on my hourly chart, for example, a lot of hesitation. We saw price yesterday trading above it for a small period of time. We would like to see price actually hold on to that level, but you can quite clearly see price is not really forthcoming. It's been playing tic-tac-toe with it, and we do need to see some sentiments here. We want to see some direction. We don't want to see a lot of wicks, because when you see a lot of wicks and candles, that means there's a lot of indecision. We want to see a nice bullish engulfing candle to break higher than 94 and to find support and to continue higher. Otherwise, we look for a bearish engulfing candle, and then we should be looking for the downside near term. Really aggressive. You can see each time we've tested 94, we've seen an aggressive pullback. So if we do see a bearish engulfing candle, the aggressive pullback area should be roughly around the 93. Why? Because that is our institution on our hourly. Get below 93, then target 92. Why? Because that's another support and resistance level that we had previous to that. Okay? Very, 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 very decisive. Got to trade is very mechanical. So look for those breaks. Put your alerts on, guys, out there, and wait for those candles to close above those areas. If not, just stand aside, because there's a lot of news out. Okay, as I mentioned, especially for the US market, the yen is very, very closely tied up with the US market. So if something happens on the US session today and tomorrow, you're going to damn well be sure that it's going to factor out on the yen. That's it. Okay, I've said my piece. That's the 4 majors for today. Please go away and do your due diligence. If you're using this particular template, please back it up with sound money management, guys. Okay, it's a fantastic template, but you've still got to use common sense, and you've also got to apply your money management rules to it. Other than that, have a fantastic trading day. If you are in anything, I suggest anybody out there who is not in anything and is new to trading, to far better stand aside and learn and see how fundamentals on this greater scale actually brings to the table a lot of volatility in terms of speculative volatility. Okay, we want to prices are trading into major support and resistance levels on most pairs. What we would like you to see over the next couple of days is a directional change. We'd like to see that as traders. We want to see price now choosing a direction. If it's trading into major support and resistance, we want to see either a break out of that and a continuation from where it's come from, or we want to see a change, a pullback. And if we get a nice great pullback, then it's likely to be a further opportunity for us to get into trades to the other side of the trade. Okay, so very, very important. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Trade serenely.